All right, good morning, guys. John here, Mr. Forex Fire. So there is CPI news later on today, so there'll be no New York session. I'm just going to take a little look at the news for this morning. If you take a look with me, I'm just going to share the screen, and then we're going to go on to... I've started a little later this morning than what I normally do. So we've got Euro news, Euro current situation, economic sentiment. I don't think there's anything going to be affecting what we could be looking to trade into this. Again, this is the ICT silver bullets, my personal experience with it at the minute. It's like flipping a coin, if I'm honest with you. Like I say, I'm not going to hold any punches or try to glamorize anything up. It's not what I do. I like to put everything in the real world. I'm not here to just to try and sell you on something. The struggle's real with Forex, to be fair. So again, you're going to see it through what I'm doing through my eyes, trying to sort of demystify what these things, because let's face it, when ICT does anything on his trainings and things like that, there is so much stuff to go through, and I'm no expert on his methods, but there is one or two things that I sort of understand in some way, shape, or form. Okay. So at the moment, what you're seeing on here is I've got, just minimize that. I've got, just going to see if I can fill this out. That's a bit better. Right. So I've got, need to get this. How do I get out of that? There we are. Right. I've got the 15-minute high, 15-minute low, previous to going into the market area. Okay. So this is coming into the market. This candle here. And if we just make this into a one dotted line. And now we've broken structure of the 15-minute high. Okay, so what I'm going to do, I'm just going to do some annotations and we're going to mark a few things up. When you see these lines appear, this is what we call a fair value gap. Okay, now, as we're going to mark things up, I would really like to see that broken at the moment. And there it's pushing through now. So we're going to get a fair value gap on here in a moment, I should imagine. We've got around about 5 seconds. You'll see this green line will certainly jump above here. Okay, there we are there. So the Euro USD is pretty weak. So I'm going to do I think I'll do a trade actually. We're going to do 10 for 10. And we'll get straight in on a trade if we can, because I do like how the 15 minutes being broken. The Euro's pretty strong. And again, we're going to do the template and silver bullet. Right. So now we've got a trade set up. And what we'll do is we'll follow a price. That there was your imbalance. Okay, that was your imbalance area. Go back up the 15-minute. I just want to see structure-wise. So we'll come up to the last buy before the sell on here as well. There's a little bit of imbalance. Structure-wise there, we'll just extend that to the right. We've got that done. Go back down to the 1 minute. That far away up at the top. I don't quite see that, to be fair. Right, well, let it do what it needs to do. My apologies, digressing a bit at the moment. So, 3 candles of bullishness. We've got within the time frames of what the silver bullet stuff is, we've got liquidity residing on this low, and it looks as if we may need to move the buy limit at the minute. Let's get the buy limit done. 10. 10, we'll move that. So now we're tagged in. Okay, now we're tagged into a trade. We do have a draw on price on this here. Okay, which is the imbalance or the fair value gap of the previous candle. And it's going to come in and touch that. I think I shouldn't have moved that. That, to be fair. But we live and learn, I suppose. And we've got the 10 pips protected underneath this swing here. I'm not entering on another trade. I just want to see what will happen with this. We would have had an entry there for sure. And in fact, buy. Profit. Tagging for 2 entries this morning, I think. I'm just going to let price do what it wants to do. And as we come down, we've got a fair value gap just above the bullish one as well. So we'll check on the currency strength. USD is gaining a bit more strength. The euro is slightly a bit weaker at the moment. I'm not worrying too much at this stage. But we do have 2 entries. We might find that this is broken that 15-minute high previous going into the market structure. This may just be what we call a sweep. Okay. We've had a sweep of price. This might have just been a fake out from this 15-minute high, as you can see on here, okay? We might get the displacement coming back through. If we get that, then we're going to be losing 2%, to be honest. We just want to hope we're going to be getting a trend, a continuation. Because you can see on here, there is no other fair value gap in here, if I'm honest with you, apart from this here. This is the drawn price at the moment. We go through this, then we're going to take that swing low. We want this to structurally hold. And what I'll do is I'll pause the video. I'll be back in a short while. We do have liquidity that resides here as well, okay? So we've got some here. And we got some here. So, again, liquidity. And we'll mark the liquidity up there. And this is what we call a trend line liquidity. So as price is coming down, break a structure, coming down 50% of this swing, come down, touch, come up, it goes to run on the draw price here, attacks, breaks a structure, a new liquidity high, come down normally 50% or comes down to try and go into the imbalance area. And then when it touches into this, the draw on price, if it wants to do a continuation from a touch of fair value gap, would be to run the play up towards this if it wanted to continue on that stage of bullishness. Again, if we come and break through this, the last line of defense for liquidity from the structure swing low to a structure swing high would be if it takes this, then there could be a change on sentiment on the price. Okay, so we just need to hold fire. Hopefully that structure is going to hold. I don't like it when it comes down like this. It looks like it's going to play through it, to be fair. It's touching on that trend line liquidity at the moment. I'll give it until after this candle. There's 15 seconds of the candle. And let's get this. Fire one out. black, fire wand, fire orange. Right, so now we're bouncing. You can see here we're bouncing off that fair value gap there, which I like to see. But now, because we're bouncing off this, I want to see the fair value gap here taken, and we've got a fair value gap here as well. I want to see that taken, because if we get that, we should, with a bit of luck, as we've come down to test into that, come up, come down, come up, come down. Then I want to see this high taken. I want to see that, and then hopefully we're going to get the climb back up to the TP areas that I've got. That's what I'm holding out for. That's what I'm waiting. Got a very strong bullish candle at the moment. Hopefully it's going to engulf through here. You can see the fair value gap now. We're starting to show here. And with that in mind, it's left one here. So this is where we could get the pull back. This is why, like I see, I've got this. Mark this up nicely. It's coming into this area here, to then possibly come back down to play into this tram-lined area, which is a fair value gap as well. Okay, I'm going to pause the video for a minute, guys, and then I'll be back in a short while, and we'll see where we are. At the moment, I don't like it when we're in this much of drawdown. I think I shouldn't have entered this high up anyway. I shouldn't have entered that high up. I should have just held structure on this particular range here. Okay, but we live and learn, live and learn. That's why I say it. I don't sort of sugarcoat anything. I show you everything live as I do it. I'll be back in a short while. All right, there we have it, guys. Like I say, I'm not here to be perfect. I'm here to show you the struggle on what it is with regards to this method, because like I said from the beginning, I still strongly believe the ICT methods is like flipping a coin, in all honesty. Okay, what I'm going to do, I'm going to continue with the video though, and I'm going to get rid of this. I'll get rid of this. I do believe we might even get stopped out on here now, so we'll get rid of the fair value gap on there. There's been a sweep, obviously, that we know. So this, we'll move this up onto here. The liquidity was taken there. We've taken the liquidity here. We've broken that structure. Okay. So now I suppose what I'm looking for now is, if we're getting a sell back into the 15-minute high, we want to see 3 or 4 candles of strong bearishness. And if we get that, we can then look for that as the displacement, and then look for the fair value gap it leaves behind. However, at the moment, we do have this still on the buy. It might prove us wrong. We might still get the point where it's come down to the fair value gap on the lowest area as an entry, and then it may want to take back off. I do believe that's high second entry that I took. I shouldn't have taken it, in all honesty, because we were covering our ground anyway with regards to the price action on this side. Okay, so at the moment we've taken an L. Like I said, don't sugarcoat, don't hide. No need to do that. I'm just trying to show you what I'm trying to learn with regard to these ICT things. Like I say, I keep strongly mentioning about the methods that he does. It's just, all it is, I can boil it down into 2 to 3 different parts on ICT. It's a take of liquidity, it's a creative liquidity, and it's a 50% of an area of any price action. That's all ICT method stuff is. It's all it is. It just, things get overcomplicated with what he does. So again, I'll run that back again with you. It's a take of liquidity and then a creation of liquidity, and it all centers around a 50% of a price action. Doesn't matter what time frame, if you know what I mean. So again, we can talk about tape reading, highs, lows, time and price, but it all fundamentally boils down to take a liquidity, creation of liquidity, and 50%. Okay. And at this stage, what we've got is, like I say, the take of liquidity. The creation of liquidity is the inducement coming back in. It came back into a fair value gap here, touched in. Now we might see the move. The draw on price that we see at the moment, okay, the draw on price that we see at the moment is, as we've come down, we've got a double top here, so there's a liquidity residing right here, okay. So there's a draw on price there. Again, we've got a little bit of a draw on price here as well, to be fair. We've got a liquidity line here. And I suppose the aim of this video, again, it's not so much for me to be perfect and give you winning trades on what I'm doing. I'm also going through what's happening with price as it's moving, okay? So these sort of things are lessons in themselves more than anything else, to be honest. So we've got double top action. In fact, you could see a treble top action, liquidity drawn price. We've got, again, fair value gap. We've got this here down to this. So wick to wick either side of the fence of this here. The reason this candle is red, it's because it's what we call engulfing. It's a bearish engulfing price action where it's just taken out the price action of these candles here, okay? It's just dwarfed it. It just swallowed it up, okay? When you see the green is generally a bullish action, okay? So as we're coming down the mountain, take of liquidity from here, okay? Sweep, creation. The creation is the pullback, generally into an area of minor resistance in this instance, okay? So come down, take of liquidity, come back in, minor resistance, coming down, take of liquidity here, and as you come down, creation of liquidity. Now, if you look at this, guys, minor resistance will be that there, okay? Look where it's came into, take of liquidity, minor resistance touched into it. Again, take of liquidity here, okay? Come down, sweep from here, come back up, take of liquidity here, come back up into the minor resistance again, so it's double tapping into the minor resistance. And then as it's done that, the draw on price now is going to be, as we say, there's an imbalance gap there, or an FVG, okay? So the draw on price, if structure of this liquidity was to hold, maybe you bounce off, bounce, come back into 50%, and then you might get a takeoff as well. We can see if this happens. If we get the bullish move like that, then I would expect that's the sort of floor that we would see on price action. If it was going to go lower, okay, you've got a slight draw on price on the bottom here. You've got liquidity there, okay? So if it wants to continue bearish, you get a push, come down, okay? Come back up, and then it'll push down, okay? I'll pause the video. We'll be back in a short while. We'll see which route this wants to take. But we do have, like I say, range-wise, low to high, stuck within the range overall, but we are creating little mini ranges within the ranges, okay? So within the bigger range, you've got liquidity buy side, liquidity buy side, liquidity sell side, liquidity sell side, and there's a fight between the draw on price within these liquidity structure areas, which is what we call the fair value gaps, okay? So again, if you take note of where we are, 15-minute high from the previous session open, okay? Like I say, it's hard when we talk about these ICT methods. I see so many things out there on YouTube where there's here 70-odd%, 80-odd%, 90-odd% success rate. It's all bullshit, to be fair. It's all bullshit. It is what it is. and it just everybody's perception of what is a percentage win, it's all down to their own personal sort of their personal method and style that they've used. Everybody's results will be different, if that makes sense. But the only way where you would get similar sort of results is if you stick to a plan and stick to the method and stick to the rules. What you find is if you start veering off the path of these rules and plans and things like that, then you're going to start seeing lots of different variables, lots of different results. So what we've got here now is this here has been a take of liquidity. So it's what you call a break of structure. Okay. Yes, it's only minimal, but I do want to highlight it. That's been a bit of a sweep. Coming back down, you've got a fair value gap here. But again, I did say we'd come up, come back into around about this area. Had this marked before it came up itself. We'll see if we'll get that bounce out. 6 seconds left, 5 seconds of this candle. We're going to get the bounce in. Close of the candle. And again, it's left a little bit of a fair value here. It's not quite closed everything up. So we could still get the reaction come down, bounce, and then the take of liquidity up on here. So as we do everything live, okay, you've now got a liquidity area there. If you want to be very, very sort of in depth as we follow price. Let's have a look. I'm just going to have a look at this other area. I'm just marking things up at the same time, guys. Here comes the bearishness. Is it going to come down and touch into this? There's the touch. There's the take. Now the draw on price now is going to be all the way down on this one. See where it's wicked? It's wicked into this area nicely. And now we've got 5 seconds left. We're going to get a new candle. Now it's wanting to come and attack this. We're going to get an open of a candle just on this side. And now we have a bearish fair value gap. The bearish fair value gap is contained within this other area here as well. So what we'll do is I'll get rid of that. Just to get rid of the lipstick. So we are getting the nice reaction from where I thought. What I want to see within the next 2 or 3 candles, if this is going to go bullish, I want to see the take of this. I do want to see 2 or 3 candles on here being indecisive, because I do think then we'll be looking at this being taken, you know. So again, 15 seconds. I want to see the price taken on here. I want to see it aggressively taken, if I'm honest. So we'll get that aggressively taken. Now we've got a new draw on price to the high side. A little bit of an imbalance area here is being highlighted. There's the close of price. Now we're getting that aggressiveness come in. I want to see this be taken. This is proven to be a bit of a wall. I'll get rid of some more of the lipstick. It's just reacting as a wall now. And you can see here, look, when I said the miniature resistance line, as you've had a break of structure, it's come back up into a miniature or minor, sorry, a minor resistance line, and it's proven that it is struggling on this area. Bit of a doji with massive legs on here. 10 seconds left. Is this going to end up as a doji, or are we going to get some wax on the candle? Want to get that pushed through? Is it going to give us it? There's, it's on the line. It's on the liquidity line. And we should get the push through in a minute. We should get this push through now. Come on. You've been touching on this quite a bit. You should be pushing through that. Let's get those bulls into control. Right on the line, it's touching. This looks like this might be the player. Yep, there it goes, there it goes, there it goes. Again, let's go as we mean to chart up. That's been a break of structure. We're now heading towards a draw on price up on this liquidity area. That's your new draw on price. I want to see an aggressive take, to be fair. I want to see that aggressive take, because what we've still got that liquidity here. And on that liquidity that's there, you've got that fair value gap as well here. So as we do a continuation of this, if it stays on its bullishness, we may get the push down, take on that, back on that, and then we might start coming back up into profit. Again, we're touching into this fair value here. There's the push through. Now the draw on price, we've got two areas of liquidity here, and we've got the imbalance of the fair value gap. Okay, so now I can get rid of this bit. I've got, like I say, liquidity drawn on this bottom bit. There's the push again. Now we're moving like I want to. Now we've got the initial trade back into a little bit of profit. I've got liquidity resides here. Excuse me. And if we get a break of structure on this bit, we've got a market structure shift as well. It's just indecisive at the minute. It's coming back up to this treble top. This is a massive wall, because you've got your imbalance or your fair value gap, and you've got your liquidity residing just underneath it. So it's a big, it's a wall of steel this at the minute for a liquidity standpoint. But this is massively, very nicely played out to what I thought. I even just put this before these candles came up. I said we'll get a little bit of indecisiveness on here. We may even get a play into that there before we get the push up, you know. So let's have a look. I want to see this broken. If I get this broken, we get this broken, then we're going to start doing a little bit of consolidation in this area, I do believe. We'll just see what we get in the price on that. Is there a way I can take this crosshair off? Let's have a look. Scales, trading. I'm not sure. We'll just wait. So again, you see how here, a tippy top, tippy top, tippy top. Wall of steel, going to come back into this bit. It's going to touch into here. There's the touch. We've got another little draw on price here. And get this marked out. That area there. And when you look below this fair value gap, the only other one is this. This is more or less the last line of defense before we start coming into the lower swing points as well. So this has proven to be a massive wall of steel at the minute. So we'll get rid of this. No, I'll not confuse you with that in a minute. I was going to start using Fibonacci levels, but I thought, no, don't want to be doing that. We are touching into fair value gap here. Euro is pretty strong. USD is getting a little bit more strength. I want to see this push up. We've got the euro in our favor with regards to the strength wise, if that makes sense. It's just not giving us that push. And the volatility at the moment, we've come out. You see the gray window? This is where I really want the push and the drives to be coming. But as it stands, from there down to here, it's around about a 13 pip range we're stuck in at the minute. I'm going to pause the video, be back in a short while, guys. However, structure was holding on this particular trade, okay? We've been marking out as prices been moving, break of structures. We've got liquidity and fair value gaps holding as a steel barrier for price to break through. I marked this up on the price floor, as I said would happen. This came out to fruition. We came back down to touch into the fair value gaps. Price is wanting to stall. There's a lot of draw on price on the upside to what there is on the downside, in my opinion, at the moment. However, like I say, we go on to the currency strength. Euro is hovering between 5.7 to 6. The USD is getting a little bit weaker. So hopefully with a bit of luck, this is just the start before we'll get the initial drive and push. Okay, I'll pause the video. We'll be back in a short while, and then we'll keep looking at how the price action is moving. Okay, overall thoughts, as I see it, these methods, what the ICT stuff is, silver bullets and things like that, they are all more or less the same as each other. It's just to take a liquidity, create liquidity, and 50% of whatever the price action is. That's all it is. Be back in a short while. And there we have it again, guys. Just look at how important this level I marked up earlier again is. Look, if we just move this along, big steel wall of liquidity here. It wants to push through it, but again, it's failing. Now we're coming back down as we push through, coming into these areas that were marked as well. Minor resistance and minor support and sort of fair value gaps. The more this wants to try and push through here, and the more it feels there's only so much liquidity built up in these little pushes here that I'm marking now. Okay, that will hold before either we're going to structurally feel on this bit, or we'll return to this top end and structurally break through that barrier. If we do that, then I do believe we'll go to the higher highs on here. But at the moment, this is what you call a consolidation phase, most certainly. Structure low, structure high, pull back into where we have an order block, and then we are failing to push through on this imbalance and liquidity areas. Again, it's going to go for another attempt, but the more this feels to break through there, it's going to either want to massively do a coiled spring and just break through with a huge push through, or it's going to want to take these bottom bits. We'll just take a look on the currency strengths. Euro still 5.7 to 6, and the USD is still on 3 at the moment. Okay, so pause the video. I'll be back in a short while. There we have, guys. Again, on price action, we have took a sweep. Okay, so now what you're seeing on here is a break of structure. Okay, break of structure, but again, I would want to see this as a market structure shift. Once we sweep that part there, we have liquidity resides on this high side. Liquidity there. So again, as we're building up the area, we're slowly coming through. I want to see a sweep of this one. Okay, now we're starting to come through, and we're starting to get within that consolidation zone. At least here, we're starting to get into what I would say still in consolidation, but showing a bit more on the bullish. Excuse me, showing a bit more on the bullish side. Okay, so again, the initial trade that we set up, we're around about break evenish, give or take a few pounds in drawdown. Draw on price below. I can start to get rid of some of this, and we can start to look and see what we've got. You've got where you're very, very minimal, to be fair. This here, we can still draw it up. We can draw that up there. Okay. Draw on price. You can see here at the minute we're actually in that. which is that there. I'll get rid of that one. So we're stuck within the price range. We've got lows, high highs, higher lows, double top, higher low, higher high. We would expect the higher low to sort of be formed there, to there, to there, to there, bounce up this, that, and then come and attack that. You see how I've got this bit here? Hopefully what we're getting price-wise on here be on here, but it all depends on structure holding here, structure holding on this bit here, okay, because we've got imbalance, and you would have liquidity here as well, okay, and then you've got the same based on there. And I'm going to close this video off shortly. I just want to say we do get a push on price on this. I'll pause the video in a moment, in a second. But again, we're coming up to around about the 10 o'clock mark. The aim and the purpose of these videos is to show you some price action movements. I'm getting in on a trade. I've lost a trade. And again, it's not about being perfect. It's just about sharing the process, the journey, and hopefully just by identifying these points of interest and things like that, hopefully you're taking something away from it as well with regards to the little bits of nuances where I'm showing you with regards to marking things up like sweeps, imbalance, fair value gaps again. What normally happens on these silver bullet moves, okay, like I say, and I'll say this time and time and time again, ICT methods are very, very simple when you drum it down to what they are, okay? He overcomplicates it where he's trying, he just keeps you engrossed on his content and things like that. But it boils down to three things: the take of liquidity, the creation of liquidity, and 50% of a market range, okay? Prime example, okay? Prime example. Push. Take of liquidity. Where is the 50%? Let's take a look. Bang, bang, look. 50%, okay, yeah, it's come down to 50%. Was there a fair value gap in there as well? Yes, there was. Where did it touch? Bang, fair value gap. What's it done that? The draw on price would be the liquidity area, which is what it took from here. This is the liquidity area. It's touched underneath the 50% imbalance. Take of liquidity from here. It's been a sweep. Where is the 50%? Let's take a look from that swing to this swing. Let's just mark this out. 50% is this area here. Okay. Is there an imbalance? Let's just take a look. You're not always going to get an imbalanced area. The imbalanced area is actually contained. In fact, yeah. 50% is here. See the 0.5. 50% is there. Okay. The imbalance area was this to this. It came at 50%. So it came and touched the fair value gap. What's it want to do after it takes liquidity, creates the liquidity? It wants to go to attack the area, which is now this area here. If it goes and takes this area, okay, there's going to be a break of structure, okay, a break of structure and a take of liquidity. The draw on prices, we move the fib low, fib high, look for the 50%. Is there an imbalance gap on there? Silver bullet, it's going to respect into one of those areas, touches into it. If there's a trend continuation, it goes to attack what it's just created on that liquidity. It's as simple as that, guys. And it's not just about time and price between certain times. The reason ICT mentions time and price is simply because market open, that's where the volume is. Okay? Structure-wise, pattern-wise, and how this plays out, it happens time and time and time and time and time again. When there's a take of liquidity, you have to have a creation of liquidity. Within that creation of liquidity, you have got to look at the 50% of the initial push phase. Within that initial push phase, when you see the 50%, is there a draw on price to deeper discounted premium areas where there is a fair value gap. Okay, that's all it is. It's all it is. There is no need to overcomplicate or overthink the process on what you're doing. So hopefully this here now is going to be the take from where the 50% is. If we get the take of price on here and a break of structure forms, okay, market structure shift, we then do the fibs on that continuation bullish move. We look for the 50%. That could be an entry one. Is there a fair value gap underneath that? Is it contained within the market swing of where the initial drive and push came to get into that area? If there is, then we mark it up. Decision time on which entry you want to do. Risk management. Target is going to be the previous structure point or the lowest hanging fruit to take the profits. Okay, again, we are now, and like I said earlier, I said we would consolidate in this area a little bit. It looks like we may do. I'm going to pause the video and then I'll give this until around about 20 past 10, and then I'll come out with a conclusion for you guys, okay, with regards to how prices moved along, what I've been marking, what we've seen, what we've marked up, and my final thoughts. Okay, so I'll be back in a short while. All right, and here we go, guys. Look, we've had a take of liquidity again. Okay, so now we've got a break of structure. In fact, you could call that a market structure shift. Okay, if we do the fib retracement, low to high, we've got 50%. Okay. I just mark that there and I put 50%. Okay, if I just mark that there out of interest, and you can see this is playing out nicely, we would possibly see a retracement back into this area, then a push up. Okay, we've got a fair value gap contained in that as well. The fair value gap a little bit in here as well. So your 50% or where the push off is, we could come down and react from this area. What I would love to see is that, because then it would take the initial take profit of what I marked up this morning. Like I say, we can get rid of this bit now. We'll get rid of this. We have broken through that, so we can get rid of that and just clear up some lipstick. We've got the sweep, we've got the liquidity residing. So we're coming up towards another barrier at the moment. But I do believe if we push through the liquidity here and then up here, we'll get a rebound and then price should shoot off. We'll give it a minute or two. We've had reactions from fair value gaps here. Again, fair value gaps here. So push, break into 50% of fair value gap, push, break a structure, pull back into fair value gap of 50%. Push, we are waiting for maybe a bounce or an inducement back down to here, and then possibly a takeoff. We just need to wait and see. Here comes a push now. Sometimes these just leave the station, in fairness. I'll pause the video. We'll be back in 2 seconds, guys, because like I said, I don't like these videos going on too long. Not be long. All right, so we've just had a news event drop. I just want to have a little look at this, and then I'm going to close the video off, I think. 10 o'clock. Okay, 10 o'clock. 10 o'clock. We've had some euro news. Okay, 10 o'clock candle. Look what's happened. We have swept down into the fair value gap again. Okay, it's touched into the 50% reaction area. Okay, so again, we were expecting to touch into this. Structure wise, we could have this like this, in fairness, because it's not really a swing back, to be honest. So structure, market structure shift, we've got the structure here, 50% of low to high, come down, touched into it. push, drive, take of liquidity, creation of liquidity, you would normally get a 50% touch into. It's done that, but it's also came down on that news event, come down and wicked into this area, but it stayed within the structure swing, if that makes sense. The bullish structure swing. Now it's starting to give us a little bit of a reaction. So hopefully now this is just contained and we might get a little bit more of a push, to be fair. We'll just see what happens with this. I'll pause the video, I'll be back in a second, but this is what happened with regards to this news event. Just to be transparent, 10 o'clock up on here. Now we're getting the push up. Now you can see the push, the drive. Now I'm hoping I'm going to get up to onto this TP. We'll stay on the camera for a minute. See, we'll get that drive up. Let's have a look. Some wiki news on here at the moment. Like, yeah, I'll pause the video for a second, guys. I'll be back in a second. But just remember, this is where the initial, I think I should not have ended. I think I entered that other trade a little bit too presumptuous this morning, you know. I'll be 2 seconds. I'll pause the video and we'll be back in a second. So there we have it, guys. We've got prices just consolidating the 50% line here. And we're structurally holding, to be fair. They say we did have a little bit of a sweep. So we've got this as the swing area now. And we're failing to basically take the top end, which is annoying because I've got a product which I'm testing, which is the ticker meter. And I've been waiting for price to go to 1.0810. Yeah, it's just about hit it here, but it hasn't hit it on that because that's supposed to give me an alert and it hasn't triggered. So it's just sod's law, I believe. So we just take it as it is. I'm going to end the video there. We've been looking at this structurally, to be fair, and we've been marking up, and I'm hoping even if someone takes a little something away of what I've been doing price-wise, marking liquidities, marking fair value gaps, marking the buy side, breaker structures, and then I'll give you an understanding of when you get like on an ICT concept. It's only, like I say, it's only 3 things. Conclusion is, it is only 3 things. You get a take of liquidity. Then on that take of liquidity, on the inducement coming back, there's a 50% area or a fair value gap. And then that's where you get the creation of liquidity. And it just continues the cycle until it gives you the expansion of an uptrend, which is what you're seeing here, to where you get to the tippy top, it creates double tops. And then what happens is, in this instance now, we are seeing a shift from this tippy top to come down. We are breaking this structure here now. So what you would see here, this right across here, now is what you would call a market structure shift. Okay, so now we are seeing a change in sentiment. Tippy top from up here will come down, inducement back, failing to break the structure high. So now we've got a lower high. Now we've got a lower low. Now we've got areas where we're possibly going to come further down, to be fair, because now we are leaving behind imbalances here. And we've got an imbalance here. I'm just going to get rid of that one because that's been mitigated through. So now we've got a change of sentiment on price. And you're seeing, obviously, a displacement happening. This is certainly a displacement, you can see here. So we could say, like I say, from here down to here, 50%. Look where it is. It's bang on where my entry level was from previous. Imbalance from that 50% area. Okay. And what I'll do is I'll make this I'll make this pink, that there is, like I say, the 50%. Put this in it inside, and if I put it in the center, do that. I'll get rid of that now. So this is the 50% area, okay? And if price is doing a market structure shift, it's wanting to come back to 50% and either do the pullback from here to do the continuation drop to where it's sort of going to attack this area here, okay? Or price will, like I say, from an ICT method, it will want to come from here, attack into a further developed area, which is your imbalance. Structurally, this is being protected, and then it's going to want to come down to attack that. Okay, what you're basically getting between these two areas is a premium area and a discount area. Okay, but we do have a market structure shift at the moment. Again, this will coincide with that. And I'll let this play for 2 seconds and then I'm going to stop the video, okay? Because like I said, I don't want to go too much. I think we've sort of covered all bases today with regards to how price action is moving. Like I say, if you are taking anything away from these, just let me know, because I will continue to create more. But overall, from this standpoint, the pink, okay, this is the expected 50% area of where you're expecting you pull back to react from, okay, and then come down to attack this. If it breaks through this 50%, the next logical draw on price, an area where it would expect to react, bounce, and come to attack this, which is what we would call a reason to drop, okay? If we push and break through this area, this would be the next logical area where we would be expecting price to do all of this from, okay? I'll pause the video. I'm just going to highlight a couple of areas. I'm just going to put this here, and we've got an opening price. We've got a breakthrough structure. So again, I'll get rid of that one because that's the 50% broken through. In fact, we'll leave that on. And I'll be back in a short while, and then we'll close it off, guys. Right, guys, so now we've got the market structure shift. Okay, we've got a reason to drop. We came up into the 50%. The deeper retracement wasn't done. Okay, so now we've had a market structure take. Okay, so just to go on to this, from here down to here. Okay, again, we've got, let's just take a look. That's the 50%. Okay. So structure-wise, market structure-wise, we've got a retracement to here and then take down, okay, which will take out the SL on my initial trade. We've got a deeper draw on price, which again is the imbalance. Okay, so if I was to highlight that, get rid of this, just bear with me 2 seconds, guys. So this here is your 50%. Okay, that's your 50% there. As we marking that, and I do apologize, I've got a really bad chest at the minute. So that's your 50%. With that range, we could get a reaction, then a push down to come through here. Or there's a fair value gap, which is here, and get the push down. Either way, this here, clone that, This is now a reason to drop. This is the breaker structure from this area here, okay? Yeah, a different color, pink. So we've had a swing of price and a take of liquidity. Okay. So as we have a take of liquidity, that's one thing tick off from ICT. You're either then going to get an inducement into 50% of an area, or there's going to be a take on a fair value gap. Okay. Let's just see what happens with this. We've got about 3 seconds left of this candle. There's the sudden shift down. It's mitigated into 50%. Just remember, guys, we're on a 1 minute chart. So this here of the 50% line, that is barely 1 pip of movement there. Okay. That's barely 1 pip of movement. So again, with this being said, this range, and we fall back onto the aspect of ABC patterns. Okay. So A, B, C. Again, I know we're getting a lot of lipstick on here at the moment. So you've got push, inducement, break of structure from there. The break of structure from there, you're measuring from B to C, mark out your 50%, and then you're looking for further inducement areas. Is there fair value gaps? You could either A, have short position here with that as your target. Here, there's a 1 to 7. Or you could have fair value gap, swing above that high, liquidity area residing there. There's a 1 to 2.63. We'll just see which one's respected again. In fact, if we just cover this, it's like 1 to 1.5. Well, that's that. This one is like a 1 to 1.5. This one will be a 1 to 2.63. At the moment, the structure of the 50% area of this is holding at the moment. Okay. If it comes down, it's a quick in and out. ICT silver bullet, continuation trend model down. We'll see if this is going to hold from a structure standpoint. I'm not setting the trade at the moment because obviously I've got a test going with regards to this one here, which at the moment's not going too well, to be fair. Pause the video. I'll see what happens, but we're structurally looking at the ABC. Done the fibs, done the 50%, done the fair value gap. We've got 2 entry models viable at the minute, and we'll see which one comes through on that. Pause the video, and then I'm going to stop the video for the day after this, guys. I think this has gone on for about an hour now. There we have it, guys. Look, simple model, told you. Okay, we'll just move this back along here. We didn't quite get the entry on the imbalance area, but as we had a market structure shift, take of liquidity here, simple fibs, 50% of the area, also the fair value gap. We triggered into the 50%, and then we've came. Let's get rid of this. And then what's happened is, there's John. It came and gave a 1 to 1.5. It actually went and done nearly a 1 to 2. Okay, so again, business model. As we structure this out, okay, let's just take another little look. We've got up to the high. God, here we go. Up to that high, okay. Here's your 50%. There's your 50% there. Okay, we'll get rid of that. there's your 50% there. We'll make it just get rid of this a minute. I do apologize. Background, we'll make it purple. Okay. We'll get rid of this. We'll get rid of this. It's already come into the 50% from this retracement. Okay. Your imbalance, it's looking for your imbalance. You've got a slight imbalance there. Okay. That there is your imbalance. Okay. So structurally, this was the player. Okay. That there is the 50%. You can't make this up. This is classic ICT in its basic form. Okay. You then have the pullback. It's surpassed the 50%. It's went into the fair value gap. Okay. So your entry could have been, that's your entry. Stop loss just above the swing. Take profit down here. Okay. 1 to 2.5. Let's just give it a minute or two, see what's going to do. In fact, what we'll do is we'll go above that little swing there. So it's a 1 to 2. Let's just see if it will play out. I'll pause the video. Be back in a second. Now we're starting to get what I like to call a little bit of indecisiveness. So you've got some double bottoms coming here now. So there's liquidity residing here. And like I say, this is a 1 to 2. There's a 1 to just under 1.78. What I'm basing my research on and what I'm doing with the silver bullet is based upon the times. Okay, it's based upon the times of market open, which is what ICT does. But I'm finding that it is basically, and like I say, I speak from the heart and I always tell the truth. I'm finding that is just what he would class as supposedly the most high probability chance of doing it. Me personally, I beg to differ. Simply going on what I've done using that time allowance window based upon the structure of what he says. The probability is just, I don't think I've been in profit yet with it, to be fair, based upon the structure. The structure's correct, what he has with regards to the fine art of what it is. It's like I say, it's only 3 things. You don't need all these other things to complicate things. You just need to take a liquidity. You need to have a creation of liquidity, which is an inducement. Upon that inducement or pullback, you've got to endure 2 areas of possibility where you're going to get a discount and premium entry, which would be a 50% area or an imbalance before the previous swing bit. Okay. And then from there, it's just basic. Take a liquidity, creation of liquidity. And that's round about it. I mean, this here, it's hovering on the double bottoms at the minute. Will it push on to give us that 1 to 2? I mean, if this comes out, that means if I'd have taken that trade and then this trade, that would be what, just under a 4% gain in that space of 5 or 10 minutes. If I was basing the preference of what it is on those 2 areas there, instead of it being the time and price and whatever else ICT goes on about. I did this sort of model back in 2021 with regards to a trend based, and it was actually on the Euro USD. And using what I'm doing here, after I think it was 6 or 8 weeks, so I did nearly 2 months worth of trading, and I did it live. I actually did it live on YouTube on here. So all the 1 minute scalpers I done, you'll actually see those in playlists. I ended up with nearly 40% profit. I did it on a paper trade account. So the concept was very similar to what ICT stuff is and what he says. He's just brought out a silver bullet. Like I say, I was doing it back in 2021. So it's not a concept that he's just sort of, in my opinion, I just brought out and said it's his algorithm or whatever he wants to call it. I was trading this way back in 2021, to be fair. And again, if you don't believe me, you can go and have a look on the 1 minute scalper. It's all there. That even those time allowances are there. We've had a sweep of price. Okay, so we just drill into this before we end this video. Had a sweep of price right here. Now it's took the liquidity. Now it's pulling back a bit. I do want to see the drop. I do want to see this come down to do the 1 to 2, to be fair. I'll pause the video. It'll be 2 seconds. And then once we get whatever happens on this here, I'll close the video off. And then that's it for the day. Because I'm not going to be trading during CPI data news. Be back in 2 seconds, guys. There we have it, guys. Last two trades. If I take those 2 trades, 4%. I've been focused so much. This is the end of conclusion. I'm going to do it now. I've been super focused on doing the silver bullet, right? Now, I'm just going to log into something while I'm off screen. And I said I was going to do this test until one of 2 things. I said I was going to do the test, and just share the screen a minute, until I either get to minus 10%, or if we keep going until we get over 100 trades, we'll see what we end up with. Again, I'm on nearly -6 at the moment. I'm on -5.5. That is purely because at the moment the half is because this is not being taken out. Okay. This gets taken out, then I'll be on a -6, okay? 4 more losing trades. Again, structure-wise, guys, this and the time and price and using that method and looking for that one pattern within that time frame, within that scale, okay? You are not going to get high probability results, okay? Because you are putting everything, and I think he calls it the silver bullet because obviously one shot, it's a kill thing. So again, the patterns he uses are fantastic. Okay, I'm just going to stop the share a minute. I'm going to talk about this. The patterns he uses is fantastic. There's no doubt about it. They work because they work on the very simple premises of take liquidity, create liquidity. Within that inducement of creating liquidity, you've got your 50% area, and then you've got a deeper retracement of maybe a fair value gap. 3 core principles of how the ICT thing works, okay? Can't put it any simpler than that, basically. However, when he overlays these things of he's got an algorithm and he's got time and price, he's got his window, he puts that there because it's a volume-based area. So he's expecting you're going to get at least some sort of reaction. And in my opinion, so far, I mean, you can see the data doesn't work. Yet you'll see all the things out there that are saying, I'm doing this, and it's 99 or 98 or 90 or 80 or 75% success. I just think I think it's bullshit, to be fair. But hey, we'll see what happens with regards to the end of the test that I'm doing. However, like I say, the concept and the rules based upon the pattern style and what silver bullet is, it's like I say, just a basic take of liquidity. There you go. 50% of whatever that swing was. There you go. And then you've got your fair value gap within that swing for a deeper retracement for a better entry. We got an entry here. It gave a 1 to just under 2. We had a take of liquidity here. Okay, like I say, we'll mark this up. We'll get the business model done. This here now has become what we would call an RTD, which is a reason to drop. Okay, so we broke the structure. We're now getting a pullback. We're taking it from the swing to the swing. We've got a 50% area here, but we've also got marked up the fair value gap, which is this bit here. Touched into it beautifully, marked out a 1 to 2. And it's just went and done. I mean, again, you could go just above the the fair value gap, which is going to give you insane results. But to do it on the swing, I'll just share the screen. I just drew this out. Okay, so again, we come up, reason to drop. Okay, which break structure from here. We mark out the high to the low, 50% on the swing. Imbalance gap, it came up the imbalance, it came down to a nice 1 to 2. Okay, guys, again, you can reduce the area down to the fair value gap, which will give you insane results. But again, I only look for the swing points. Okay, high to low. When you get that high to low price range, because it's broke the structure, you've got your 50%, your fair value gap. You're going to trade for one of them two, and then you're going to target. After those have been your draw on price, you're then going to target the liquidity that it's just produced. Silver bullet in a nutshell. However, we do not use it. The silly time and price and volume market opens, in my opinion. That's it for this video today, guys. It's went on a lot longer than I was hoping. Started this just after 8 a.m. or 9 a.m. It's now 25 past 12. I'm not going to be doing any trading during CPI. I'm going to go and have a rest now. It's red hot up here in the northeast of England. If you're taking anything away from these videos, please let me know. If you have any feedback or anything you want me to talk about, please drop it in the comments. Okay, I will do more of these if people are watching them or if people are taking something away from them. Okay, thank you for watching. Please comment, please like, and hit that subscribe button to get to know when I go either live or when I put more content out there. Catch us all later, guys.